All right, just a quick one. Yes, I promised to drop a video on every trade that I take, both the one that goes well and the one that didn't go well. So I people will have some take home from there. Okay. So at this point in time, I think we have about two trades that didn't go our way this week. One was on Monday, that was at 10 IS, and the one on yesterday midnight, at 75 ONS. So I want to make it. I want to make this video so that the upcoming traders should know that trading is not all. Forex trade is not all about making profit all the time. You should also prepare for losses, and that is the reason why you must take your risk management very seriously, so that you'll be able to stay sustainably in the market. Because one loss should not mar you or destroy you. You understand? So your risk management is what can keep you safe in this market. You understand? So I wanted to see how we do this trade, and why, or how it went bad. So this is volatility 75 I1S or IS. So I took the analysis from the daily time frame. I took the analysis from the daily time frame, and like I always say, my strategy is a candle range theory and a smart money concept. Understand? I identify the last candle, the range, the high and the low of the candle, and then wait for the manipulation of the following candle to close within the range before I can conclude where and how to take my trade. All right. So on the weekly time frame, I went to the weekly time frame to know the history of this trade. What has happened in the past on this pair, and what happened in the past was that there was this resistance that was rejected once. It was rejected once, second time, and the third time. So having seen that, we should have it at the back of our mind that it's supposed to reject the third time. All right. So that is what that is how traders assumed. So now here, from the in this area, in this area, there was this there was this pool of liquidity, and the candle range, the weekly candle range that has displayed before, moving down to this point. Now that it's coming up to this point here, we also need to identify another candle range. So, and at this point, the candle range has not been identified on the weekly time frame yet. You understand? So it is still pushing up. Now, on the daily time frame, we were able to identify the candle range as I did yesterday. That was the time that this candle was still buying. That was when this candle was still buying. Excuse me. I want to use this one as my cursor so that you guys can see what I'm pointing at. All right. So that was when this bullish candle was still buying. So now we have these two candle, this opposing candle, the bullish candle and this middle bearish candle that has created a manipulation with the wick. This is the wick. This wick here that took out the previous blue candle is what defines our candle range. So, and it closed inside the range. So from here to the wick of this candle is where we have our range. Okay. So now that it has happened like that, and this particular candle was approaching that point, it was approaching this line. So we were meant to hibernate for a for what do I call for our entry. And how do we take our entry? We're supposed to go to 1 hour time frame to take our entry. All right, we're supposed to go to 1 hour time frame to take our entry. But the problem is that being that we are managing a small equity, taking entry from the 1 hour time frame is not always advisable, because your equity may not be able to contain the drawdown. Okay, so now at this point, from here, from here, from here to here, this is a sweep of liquidity from the top here, sweep of liquidity. Understand? Sweep of liquidity, and then this is what SMC Smart Money Concept call liquidity void, because after taking this liquidity, the liquidity resided below this one also has been taken. So which give us a very balanced price setup for us to start selling from here and take our and drop our SL above here. All right, and drop our SL above here. So and then take this place, use this place as our full TP. So unfortunately, my SL was so close to this week, and it came up here and took me out. It took me out before it delivered to this TP1. And how did I drop how did I use this place as my entry? Let's go back to 4 hour time frame, because I took this trade on a 15-minute time frame because of my equity, because I was trying to ensure my risk management. So I use this place now as my what do I call, as my candle range here. I use here and here as my candle range, and the market was pushing up here. So having used here and here as my candle range, and seeing these two candles, one the middle one has already done the manipulation, and then this one delivers. This one has already delivered to almost the full TP. Okay, so approaching it there now, we are expecting it to deliver again. It does happen, but yesterday own failed. Although yesterday also tried, it doesn't fail. It tried, but it took me out. Maybe because my SL was too tight. I was trying to protect my equity. It's not my fault. I was trying to protect my equity. So it delivered, but how do I arrive at my conclusion? On the 15-minute time frame, I saw a break. I saw a change of character and a retest. Yeah. Okay. This is the change of character. This is the change of character that I saw, and a retest into this point. After this one drops. After this, okay. After the drop of this bearish candle, that was where I enter and took and drop my SL above here. Okay, so let me drop my scanner to show you how the scanner identify my my point of entry. Okay, this is the change of character from the scanner, because the scanner does a lot of analysis for you. So, and I dropped my sell here. So it sold to some point and then went up and took me out and took me out and took me out after taking this liquidity, because you know that a lot of people have seen this as a break, as a very good setup to trade this thing, and they went slightly to take that liquidity. Understand? To take that liquidity before it drops. Understand? And after it drops, it started buying. And why was it buying? It was buying because the daily time frame created another uh, another high. It broke this the what's it called? It created another break of structure, which is here. Which is here. It created another break of structure. So coming back coming back into this place is going to be just a little pullback before it continue the journey. This is the candlestick that make me, as it closed above here that yesterday, I have no choice than to close the market. All right, but immediately I closed the market, it still came down. So that was how I lost that trade. And it was night. I had to go and sleep because I was tired. So the second one, which is volatility 10IS, that one was on Monday. We took that trade on Monday, and the trade took us out again before it went our way. Now this is what happened. We have we have a head and shoulder here. Head and shoulder was created here. Let me use this. We have one shoulder. We have the head and the shoulder that created and dropped this market to this point. All right, and there's a break of structure. Haven't seen the break of structure here. Taking out all the liquidity that resided here. The next point of interest should be if there is any fair value gap or an order block. And now we have two fair value gaps here. We have two fair value gaps here. So now, how do we know the one that is going to use? Yeah, the two fair value gap here fall in the same area of our Fibonacci retracement level. That is the discounting area of our Fibonacci retracement level. That is below 50 Fibonacci level, which is this is 50 level, 50 Fibonacci level, and okay, yeah, here this is it. So it's even gone below 61.8. So which we are supposed to take trade. Once we see a setup from any of this area, we should take our trade. And now we saw this. Let me remove this. And now we saw this. We saw this bullish hammer. The bullish hammer, the bullish hammer shows that the market is going to push up or it's about to push up. Okay, I will identify the bullish hammer like this. We will use it to identify. We will use it to see where our candle range should be identified, or where we can assume our candle range. So this is where our candle range has been found. Then we were not supposed to take trade immediately because we still have to see some confirmation from the 15-minute time frame, which is what I did. 15-minute time frame. All right. So on the 15-minute time frame, there is a change of character here. And then the market pull back. Understand? There's a change of character here, and the market pull back. It pulled back into this place, creating double bottoms. Understand? Creating double bottoms. So after creating these double bottoms, it dropped down again. No, I took the trade from here. And I closed here. So how as it's dropping down into this fair value gap, I have to enter another position. But that position couldn't go well because it came to kiss the second fair value gap below. Why my stop loss was below the first fair value gap. I think that was what happened, that we lost the trade. And immediately it came to kiss the second fair value gap, it went our way. So that doesn't mean that we were not making a good analysis. The analysis is good, all right? The analysis is good, but the entry is a bit faulty. And even if the entry is not faulty, you cannot get it all the time. You can't have it all the time. As you are making profit, don't be overjoyous, because a day will come that you also be making losses, which you are not supposed to cry because you make losses. So this is what we did within the week. I will try to see whether I can see another entry today again, so that we can be able to recover what we have lost. This one has played out. This one has played out. It's supposed to be a very good entry. This was supposed to be a very good entry, but I didn't. It was supposed to be a very good entry. I do that fair value gap here. Fair value gap. Use this as other block, because this is what this and copy. Other block. Alright. Supposed to be a good entry. 15-minute time frame. We'll see a break up. We'll see break and retest. Okay, break and retest. Given double top again. That's already dropped. Okay, no problem. So I think this is what I have to tell you guys. Maybe people can take any correction, or maybe this one will add more to your knowledge. Thank you for watching. If you want to see this my updates from time to time, please you can click the like and subscribe to my YouTube channel. Thank you.